Hey, good afternoon, everyone. December 5th, 2024, first broadcast of December. That's exciting. Christmas is in the air and everyone's joyous and happy.
Well, certainly all the hodlers are.
Yes, indeed. Cora from Holland with us. Daniel from Malaysia. Nice. Nice. You know, I've never been to Malaysia. I really want to go to Kuala Lumpur. Yep, from London. Andrea, good to see you. Good to see you. Excellent. Interesting times. Yeah. So on this day in history, Bitcoin broke 100,000. But also, I don't know if you know this, but like
it's also just reached an all-time high against gold, by the way.
Oh, it has it? Ooh, yeah. Interesting. Yes. Yeah, Cord just says, woke up above 100K. I wasn't too surprised. I guess it had a lot of strength yesterday in the Fed, and I did sell some calls, but I'll get into that later. You got to do it. But anyways, I wasn't too surprised to see that strength continue, and we knew it had to break 100 grand eventually. But the funny thing is, though, right after World War II, I can't remember, it was like 45 or 46 or somewhere in the 40s, an entire aircraft squadron disappeared in the Bermuda Triangle on December 5th. I was fascinated with the Bermuda Triangle when I was a kid. And I don't know if you had a show in the UK. It was hosted by Leonard Nimoy, the Spock, right, from Star Trek. Mm-hmm. It's called In Search Of. They have In Search Of. The mysteries like the Loch Ness Monster and the Bermuda Triangle. And I just gobbled that stuff up as a kid. I freaking loved it. So my relating story, my segue here is if you shorted yesterday, I think it was going to hold. I guess your equity disappeared like that aircraft squadron into the Bermuda Triangle.
I was waiting for the punchline.
Yeah. Fun. Now, in all, to be perfectly transparent, I did sell, I think 98.99 calls, December 6th, expiring tomorrow. I thought, it's 2 days. Surely it's going to bounce off previous highs, right? It didn't. But I did hedge those off with December futures as it ran up through. So when I woke up, yes, the price was up, but my equity didn't change too much. So I'll find a place to put that value. I'll probably just roll them tomorrow morning.
Actually, we've got an in-the-money call on our what's it call it account? SynthMiner, which we could probably fix while we're on the air.
Oh, sure. That sounds great. Great. Hey, Hans from Amersfoort, Holland. Excellent. You don't get a lot of Dutch people on this show.
No. Yeah. Dutch people have always historically been very good at making money. So they know it.
Yeah, they are. All right. Let's carry on. So the topic today is Bitcoin going to drop? Exclamation mark, question mark, exclamation mark. Now, whose stupid idea was it to do that as this week's subject?
Well, because we wanted to shock the audience into coming to visit us.
Right. Some clickbait. Yeah.
I was hoping that a load of Bitcoin maxis would turn up to tell me how wrong I was.
Well, they're here now. I'm sure they're going to scold you. Can you see my screen?
I can. Yeah.
So that's the S&P. Here's yeah.
I was going to say the S&P looks like Bitcoin.
Yeah. I think we're going to talk about that in a minute too. But anyways, in all fairness, yesterday and earlier this week, we were getting these wick downs. And yesterday, we had this crazy wick down. And we're thinking, interesting. Are we going to go back down in this area? I wouldn't be surprised. And I know a lot of people were hoping that, and they're probably going to pick it up here. And some people were even hoping they would go all the way back down to from whence we came and pick it up, which would have been the deal of the century. Probably, maybe. But instead we shot up. So that's the way she goes. But yes, S&P, I logged in this morning. I took a look, and I got to tell you, Richard, regarding the S&P, regarding MicroStrategy, and I know you've got your thoughts on NVIDIA, these are due to be shorted. Now I'm not saying to do it right now because I know the S&P can end up here by June, and maybe it will with the new.
Yeah, some of the banks bank analysts are calling it up another 15% next year. Yeah, but
Yeah, but the thing is when these things happen, you never really expect it. Right. So to start building some short side either protection or bets, I think would probably be a good idea. Whether you've got futures triggers orders in, or you're going to buy puts. Sorry, go ahead.
Sorry, I was going to say, we've got a delay today. I was going to say I'm actually in the mood to build on my short Nvidia collar.
Yeah,
so
or
I think that's going to be a carnage.
I think the other thing you could do is you could go along the VIX too. Because if it dumps, this thing's going to shoot up to 40 or something stupid. So I suppose you could do it. You could Texas hedge. You could short the S&P and you could buy.
Well, I think it's kind of fair, right? I mean, what's the time on the time to expiry on the VIX future? Can you get like a year VIX future?
Well, I'm sure you could buy leaps, can't you?
I don't know. I mean, you could. Yeah. Which one of us has connection issues?
I think I didn't notice a connection issue until just now. So
okay, maybe. Yeah.
I'll stop streaming Netflix over here. Would you think that would help?
I might do it yet. There's a question here, actually. Any possibility implied volume Bitcoin could spike to levels of 80? Yeah, well, why not? It was at 72 this morning.
Yeah, absolutely. And every time it's made a pretty big move up or down, we see some pretty wild moves. Remember a few years ago when it went up to 60 and then it had the mother of all sell-offs and went down into whatever the 20s or whatever the hell we did?
Yeah.
I remember vols went up well over 100 and they stayed up there for a little while. It's like a week. It felt like eternity.
Yeah.
But, yeah.
I was going to say, actually, related to Core's question, which is not in the right channel, by the way, but we'll forgive you this time.
Don't let it happen again, Core.
Yeah.
Let me read the question because people might not see it. So Core says, do you think retail traders coming in after 100K, what could trigger the price of Bitcoin a bit higher?
So I think that we are probably about to enter a cycle of retail starting to get drawn into Bitcoin because they are now going to get convinced, and they're going to, more importantly, they're going to get bombarded by the news about how important it is to own Bitcoin. After the rise, of course, because always the media always tries to sell you stock once it's risen. And I think we've seen for the past 3 months at least, I think retail FOMOing into the S&P. Meanwhile, company directors have been quietly selling it by ratios of higher than 20-1. So for every stock bought by an S&P 500 company officer, he's sold 20 shares. So I think they know that this is at toppy levels, and the same will happen to Bitcoin. The trouble is with Bitcoin, there's no way to price it. There's the stock to flow model, and there's the power law model, and there's a whole bunch of cock and bull stories that people tell themselves. But the reality is, no one knows, right? What the real price of the total value of Bitcoin in the world is. So yes, we could have another leg up. We could easily have another 50% up by June or 100% up by next year. Why not? And we could also have retail being sold to right now, and then dump back down to 70 and taking them all out. I think for me it's unknowable right now, right?
Yeah. And that I was going to bring that up actually when I was talking about the VIX and the S&P and the insider selling has been, and it hasn't just last month or two. It's kind of been all year as the market just keeps ramping up. Insiders are dumping, but you never know. So but if you start preparing and maybe you're buying some long-term puts or you're a little bit more brave in selling risk reversals or something, there's never any guarantee. It feels like you're spending a lot of money for nothing. But if you have to buy it when the market starts tanking, the premiums will be through the roof, and most people will shy away from paying that money.
Yeah, I was going to say what I'm doing is I'm buying. I'm actually switched to buying infrastructure stocks in the S&P. So I buy things like oil pipelines and shipping companies and that kind of thing. And as my hedge, I'm shorting Nvidia by selling a collar on it, a zero cost collar. and because the market's super bullish about it, that's super cheap to do. This is not advice. This is just what I'm doing, and I don't know any better than anybody else, right?
Hey, we were going to actually, while we're sitting here, why don't we deal with the SynthMiner in the money call? Do you want to do that now, or?
Yeah. Shall I share the screen?
Yeah. Go ahead. And just as a reminder, with the SynthMiner, we're generally selling, puts or put spreads, but we'll do put to call ratio 3-to-1 ratio. We try to keep 3-to-1, so we're always sort of long delta.
Yeah. So we've got no problems at all. We're really happy. This account is now worth $10,000, and we started it with $5,000 almost a year ago. So we're very happy with this.
We doubled it, I guess. Yeah. February, I think we started it. Yeah.
So we've got this in the money call here, which is pretty deep now. Well, I say pretty deep. It's one hiccup away from being out of the money, of course.
Yeah.
and it's trading at 73 vol, but with a massive perp premium. So the funding cost here is 11 bits.
Well, I looked this morning, and I think it was about 6%, if I wasn't mistaken.
Yeah, well, if you look at the futures here, look, the 1 week, well, the tomorrow future is trading at 100% return.
Yeah.
Interest rate. Bear in mind, only for 1 day, right? So you're only going to get 30 basis points. Mind you, that's still not a bad trade, right? It's 30 pips for holding that for 12 hours.
Put $1 million short right there. Boom, make 30% overnight.
But looking at here, looking at the interest rates are the implied rates are pretty high out until probably June next year now. So, and what that means is that not only do we have positive skew on the vol surface, we also have an elevated future versus the cash, which means that selling puts is going to feel really, really cheap. So if we reverse this to puts, we're going to have to go super close to the money, or deep in the money, right?
And what do we do when the market rips? We buy puts.
Yeah. So I'm wondering whether we should actually roll this out for time and see if we can find 350 basis points way out on the calendar.
Easy peasy.
Yeah.
Easy peasy lemon squeezy.
Well, end of December, we could. There's a mother load of open interest, by the way, on December on the December expiry. It's like a record amount, gazillions. So
can you zoom in just a little bit so everybody can see a little bit?
Yeah, that could get choppy. So to get like 330-ish, it's 112. 350 is like 110k calls.
Me gusta mucho. Look, we've got cover at 130, which is a mile away, but technically it's there for the margin engine.
And there was me trying to persuade you to sell it. You were right all along, right? So I think we buy this back at 355 or 360.
Let's do it.
Yeah, there we are. Filled it 355 at mid. Nice.
Yeah.
I love it when the markets move around because they get really, really liquid. You can get filled. There's always someone looking to deal with you. And then we sell the 3.8, this one here, 110.
Yeah.
And we've rolled it out 3 weeks, and up several percent, like 8-9%. I mean, when vols are high,
$10,000.
You can get away with this kind of shit, right? It's really nothing to be concerned about at all. And then on the book, I think we're short. We're short one put there. We didn't ever get filled on our order that we put in, so we're actually. Yeah.
I think we're still 3-to-1 ratio, aren't we?
No, we're 2-to-1 at the moment.
Oh, we don't have anything in December.
No, that's the point, because I think we put some sell orders in for 13th and they didn't get filled. So we could put a seller put, but then again, do we want to be selling a put on the day after us?
No. Could Bitcoin go to 115 by the end of the weekend with it? Oh, we should have sold that put. Yes, but I think that.
No, look, and here's a snapshot I took of the vol surface a little bit earlier. I mean, this is what we call a smirk. So normally you see a smile. You can see this? No. Oh no, you can't see this. I'm an idiot. No. Hang on, let me screen share the screen as opposed to the window. Entire screen. Let's start again. Here is a vol surface I prepared earlier, and there's a. Well, I think that's more of a the market's had a stroke and
Yes.
one side of its face, right?
Yeah,
so what you're looking at here is the implied vol at 40 delta calls, 35 delta calls, all the way up to 5 delta calls, and then down on the puts as well. And you can just see there's massively more vol on the calls than the puts. And the classic thing to do at this point is to buy the underlying and sell a risk reversal, sell the calls, buy the puts. You just print money. I mean, it's basically the basis trade on steroids. So I'd be really careful about selling puts, in this market.
Yeah, and you know what? As bad as it always looks sometimes, whether the market's going down or up, and you're trying to balance off your deltas or whatever you're trying to do. The market always gives you an opportunity. Yes, it may sustain one direction for a week and just be relentless, but it will give you an opportunity. And we're going to have our down opportunities to sell puts, and that's why when puts are cheap, buy them. When calls are cheap, buy them.
Exactly. Yeah. So there's our move overnight. It looks pretty shocking. That's the 5-day plot.
Yeah.
And
this is all based on Powell, right?
It looks like Powell was the catalyst. Yeah. I mean, it could be that the market was just waiting for an excuse. All my buddies in my sort of hodler buddies, the Bitcoin maxi, we're all saying that there was this massive sell wall at 100K, and I can only imagine, which was sort of keeping the price crushed under 100K, and they were all lamenting it. But I suspect that after that speech, if you were short 100K call, 100K or futures at 100K, you probably lifted your order, right? Because why wouldn't you? Powell on TV kind of probably inadvertently admitting that Bitcoin is gold.
Yeah, although someone could argue, hey, it went from 94 to 100. That's 6K. That's a pretty big move, and maybe a good time to short, i.e., me. But
this would be a good trade for our mean machine, wouldn't it?
The mean machine did take some short. I think it did. So we're going to have to deal with that expiring tomorrow. So.
Yeah, but again, we can roll that into way out and be fine.
Yeah. And in all fairness, the market has been a bit neurotic. So really since the end of October, beginning of November, these moves without much pullback. So not a lot of mean reversion or just little glimpses of it before it takes off again. That's tough. It doesn't normally act like this, and it's not going to do so forever. So it's important to remember that.
What I wanted to say, Shane, about this is that the reason I showed this smile is because that mean machine trade, and actually the trade we just did on the SynthMiner, right? What I want you to realize is that we were in the money on puts, and that was expensive, 330 to buy them back. But remember that an in the money put is effectively, if it's hedged with the future, is effectively an out of the money. Sorry, an in the money call is effectively an out of the money put, and puts vol are being priced down here at like 60, and then we rolled it out to 1 month or 3 week.
3 weeks,
which is the purple line at like 15 or 20. So we actually sold it at 70 or 65.
Yeah, and we gained $10,000 of strike doing so, which is
$10,000 of strike and like 10 vols in price. It's in a market like this, it's so easy to roll your calls, and that's why you shouldn't be afraid of being short calls.
It's just nice if you're covered so that you feel less pain. So.
Yeah.
So got a bunch of questions here. Why don't I start addressing those? Because it might take us past the bottom of the hour.
Yeah.
So Kadajik, sorry if I pronounced that wrong. Any possibility implied vol in Bitcoin spikes level? Hey, we already talked about that. I'm sorry. Yes,
absolutely. I've seen Bitcoin vol at 300.
Yeah, it's amazing. Branko says if a MicroStrategy should be shorted, should buying the MicroStrategy convertible bond work well so you get downside protection but retain upside? I have no idea. I don't. Convertible bonds and stocks.
Hang on. Buying the convertible bond is probably a bit like buying a call option, isn't it?
I haven't dealt with bonds in a long time, so I'm not going to try to wrap my brain around it right now. Vladimir, good to see you. So doable, 80 vol doable for several days. Yeah, no problem. Hans, do the Chinese people still have access to Bitcoin? Well, technically, the ones in China don't, although they get around it. The ones outside of China probably do. I don't think there's anything stopping you from doing it if you're outside of China. It was kind of a joke, but not really. But anyway, I think in most people we know in China, and it's not a lot, but they've got no problem trading in Bitcoin. They just go around and do whatever they do.
In my systematic business, I do a lot of trade with Hong Kong firms and Singapore firms.
Okay, Kajik, one more question. Funding costs of Bitcoin perpetuals have spiked over the last 24 hours to levels of 80 to 100% annualized. Is it correct to assume this makes calls relatively more attractive?
Well,
I'd say so, yes. Yeah, sorry, go ahead.
Yeah, so what it will do is mean that there's an arbitrage between the future and the perp. So people will sell the perp and buy the future, which then increases the cost basis of the option. So yes, call options will get more expensive because of the future, and they're more expensive because of the skew on vols. So they're mega value to sell right now, and puts are mega value to buy. So in my view, buying on deribit, buying the risk reversal makes you short. It buys the puts and sells the calls because there's two conventions for risk reversals. So buying the risk reversal right now looks like a good trade to me. But don't take my word for it. Do your own research.
Yeah. Oh, Vladimir. Use prop challenges. You'll be able to hold that short trade without any risks. Yes. Collecting funds as profits. So we were going to have a call with Vladimir, but we've gotten so busy. We just let's book that and get that done so we can talk about that. Dom, made it. Anyone buying the 200K March calls yet? Oh, that's ambitious, Dom. Well, it's 4 months. It's doable. It could happen.
What's the vol?
What's the price and what's the vol on them right now?
72.5 vol. You'd have to pay $1,600 for that call.
$1,600 for an at the money March call.
For a $200,000 March call.
For one Bitcoin. That seems like a pretty good deal to me, actually. $1,600, and I could have one Bitcoin.
No, $1,600
if it blows above 200. Like in this environment,
well, you get the one delta exposure above 200, yeah. But
now I would sell that as a spread in order to reduce the cost. But anyways, so Paul says sell risk reversal equals sell call by put.
It depends on the convention. There are two conventions. It's confusing.
Yes.
But yeah.
I say buy a risk reversal if I think the market's going up, and sell a risk if the market's going down. But some people do it the other way.
Yeah, deribit on the deribit combo screens they use the other convention. So for them, buying a risk reversal means that you're betting on the market going down.
Buying the put, selling the call.
Yeah.
Doms, sell the say 25 delta call and use the income to buy a put. Yeah,
exactly. Yeah, I use 30 delta risk reversals to just manage the downside risk.
And right now, if we think about it, because the skew is so heavily on the call side, we can sell those calls for a nice profit and still buy some puts, which are cheap, and come away with a net credit, which is nice. Because if it ends up going up against you, well, you got to roll it, but you're not spending money to do that. So
yeah, look, 2 months.
Yes, Dom says generally getting paid to do so. Exactly, Dom. Yeah.
Jack, one of my nice trades I like to do is 30 delta risk reversal here. So this is the January. So the 30 delta here is at 125,000. So selling that is going to bring you in 425 basis points, which you can then spend on a 94,000 put.
So you said that was a 30 delta call?
30 delta call, and that lets you buy a 26 delta put. But that put is 11% away, whereas the call you're selling is 17% away, and you're pulling in premium.
Earning credit, Hey, market gives you opportunities like this, and again, not to say that it won't blast up through 120. Who knows? The market.
No, you'd want to hedge it. You'd want to hedge it, but yeah.
Now you could use part of that credit and buy yourself some cover. It'll be quite distant, very distant, but you could, or you could put some future triggers orders in to hedge it with futures or whatever you want. Dom, So, Dom, Paul is asking you a question. He's saying, what time horizon sell weeklies? And I guess this is for the risk reversals.
They can get a room.
That's right. You guys get a room.
Okay, we've got stuff in the Q&A channel.
Hang on a second. I'm not done with this one. Dom says, regarding the convertible bond position, the convertible bond position for them is a vol strategy. They'll then be short the stock to hedge and capture the vol premium for free.
I think that's reasonable. You could essentially certainly short the calls and be long the, and there's probably a trade there, yeah. Or you could be short risk reversals on MicroStrategy and long the stock or long the implied option in the bond. Yeah, makes sense.
You have to do some research and send your paper into us. Question from JK. Do you ever consider using stop loss in the SynthMiner account instead of spending money on protective calls? ChatGPT knows deribit API very well, so implementing that should not be a problem. I never considered using AI to ask it questions about things.
We could say, hey, ChatGPT, while I'm sleeping, would you mind just watching my book and
that's right.
Close me out if it goes bad? Yeah.
Yeah, and some conditions. Don't do anything stupid and only make money.
Yeah. That'd be brilliant. Do we run stop losses? The trouble with stop losses in crypto is that you always get wicked out. For you not to get wicked out, your stop loss has to be like minus 25%, and even then you'll get wicked out.
Yeah, it's like trading currencies. You get these big wicks sometimes, and it's annoying as hell. So you have to consider that. So I think we've talked about this before, and I think a nice compromise is using futures to hedge off some of the risk, maybe 25% or something, just in case you get these wicks and it doesn't work out. So you're just taking some of the bite off with futures. So I think that hopefully that answers that question. Question from Paul. Based on last week's tip, hang on, we gave a tip last week? What the hell did we do? Oh, we're going to get sued now. Okay. Based on last week's beep, I looked at my deribit P&L over 2024, Bitcoin only, and discovered that 80% of my gains were eaten up by deribit fees. Oh my goodness. Yes.
Yeah, well, so there's two very important things that you must understand carefully before you make money out of trading. One is tax law, and one is the effect of trading fees. And you're right. For small position sizes with frequent trades, then trading fees on options can feel high, which is why in my systematic book, if I sell an option, I keep it to expiry, and I don't mess with it. I just hedge the delta with futures. But if you're trading options that have a premium of like 1,000 basis points, then it matters less. So the art is to trade as infrequently as you can. Of course, the exchange would like you to trade more frequently. And I have brought this up with the management of the exchange a few times. I think they get bored of me ranting at them. Because my position is if you made it cheaper for people to trade small size options, much cheaper, and then they would do it far more often, and they'd end up making more money.
Yeah, and I think if they offered, instead of trading 0.1 of a Bitcoin, you could trade 0.01 or something, or 0.05, or make the increments a bit smaller, might be helpful too for some people.
Yeah, but I also think actually if you're trading like a 50 basis point option, which is a very attractive option to trade, like in a week or less than a week, you want to be trading those a lot. But if you're going to be spending 12% of your premium on fees, it kind of puts you off, right? So I think there's something that could be done. Personally, I think there's something that could be done there. I don't speak for deribit. It's just my own personal view.
And for people that trade futures, if you're trading, the minis or something, and you look at the micros, the micros basically have the same fee structure. So, instead of making $300 on a trade, you're making $30, for example, in micros, and you're paying, $12 or something. And it really can make a difference. So, and one other thing I'll mention. So we talked about the fees, and you're saying, hey, I hedge off in the systematic book using futures. So there's going to be fees involved there too. So have you compared the fees of doing that versus if you would have just closed the positions?
We're very, very careful to try and always hedge as makers, because I think the futures trading fees are a little high as a taker for me. because we hedge a lot. I mean,
Yeah.
we'll do 10 or 20 times the amount of futures notional compared to options notional in a month.
Mm.
And so we actually try very hard to always be makers. And what we tend to find is that the maker rebate can offset the taker fee in the options because we have this 10-to-1 ratio.
Gotcha.
It's not perfect because we get a bit of hedging error because we're makers,
Sure.
but it feels better.
Yeah, there's always going to be some slippage, isn't there?
Yeah.
One more question from Paul. I buy back short options at like 1 basis point. Is that stupid due to deribit fees?
No, it's not stupid because the deribit fees are capped at 12.5% of the premium that you paid. So you're not going to be paying 3 basis points on a Bitcoin. You're going to be paying, a tiny.
Yeah, and I know what you mean. I know what you mean, Paul, because that was kind of cool. Rich, you were like, it was pretty weird. I've never seen someone sneeze like that. I actually wouldn't mind if you did it again, but just give me a heads up.
Get on camera next time.
Yeah.
So no, look, never ever count the cost of taking risk off the table. If you're paying a bit to get rid of risk, it's a bit well spent because some crazy risk-loving Yahoo on the other side is selling that risk for a bit. And if the market does what it did last night, they get really hurt.
Yeah, that's a good question. And I know what you mean. You kind of feel dominant, and the next day, of course, like expires worthlessly, and you think, "Am I just giving away money? Like, why not just let that expire?" But that's the way she goes.
And just to put this hammer this home, so we trade vol, so we try to sell vol when it's expensive and buy it when it's cheap, and vice versa, right? Because we're always delta hedging, so we don't really care about the price; we care more about the vol. But I mean, in our systematic books. But even so, if I've got options that are like 5 delta and they're 6 basis points at mid, and they're priced at 80 vol, but they're going to expire in 2 days, I'll be like, you know what? What can I gain from this option? All I can gain is like 4 basis points of premium. Why the hell would I just get rid of it? Put the risk somewhere else.
Off the table.
Yeah.
Because 2 or 3 times a year, that thing, that'll be fine, turns into a freaking nightmare. And you think, why didn't I just take the damn thing off?
And when I was at Citi, there was this saying that people who, and in fact, there was somebody who made loads of money for 4 years in dollar yen by selling every day out of the money 1 day options for super low premium. And everyone said this guy's picking up pennies in front of a steamroller, or for the Americans, picking up dimes in front of a road roller, whatever you call them. And sure enough, after 4 years, they got wiped out.
Yeah, it works really, really well until it doesn't, and then when it doesn't, it's a freaking disaster. Yep. Vladimir says lowering increments, so the amount that you can trade in Bitcoin. He thinks that would be a great improvement. I do too. I think it's just maybe more accessible for more people.
Yeah, I've been on at the management of Deribit about this for a while, and every other exchange out there, because everyone copies Deribit. I agree. 5 bips was fine when Bitcoin was $3,000, right? But now Bitcoin's $100,000.
It's different now.
$10.
Yeah. Dom says he's been ranting at them. JK, they have no competition, so nothing will change. Dom says yet. So I guess Dom's probably launching his own exchange pretty soon. It's called Dom Trade.
The excuse I'm always given is that it would overload the tech, which I think is utter nonsense. That sounds like just a bullshit excuse to me. But who am I to? I've only been writing exchanges for 40 years, so
What do you know? Vladimir says, not always. Be careful. Do not trade deep in the money options with low premium left in it, because in this case, you're going to pay 3-point fees for it. Yes, we talked about this last week, didn't we?
That's true.
Yeah.
If it's deep in the money, then hedge it. And so if you're deep in the money on a call, then buy a far out of the money put at the same strike and sell it, and then buy the future. And then you're hedged off, and it will all expire for nothing. Yep,
it's locked in. It's boxed up. Ain't going to do nothing to you. It's all good. All right. Hey, we've gone past our time. You know what? I had a little poll, and I forgot to bloody do. Jesus freaking Louise. Here's the poll. I'll publish the stupid thing anyways. Does Bitcoin keep going up all December? Given now that we've busted through 100K, all the technical analysts out there being like, yeah, here's a technical breakout. It's going. But it's Bitcoin, and it tends to do things.
Good question, right?
Yeah.
I don't even know how to answer. I think the probability is up.
I think so too. Yeah. That doesn't mean there won't be opportunities to sell calls or do things, but you might want to just think about buying some puts while they're cheap, protective, just in case Bitcoin decides to do what Bitcoin does. I think that's a good idea. But hey, look, the poll's bouncing around a little bit, but the vast majority. If you want to go to the poll and put your answer and do it now, I'll end it. But basically, about 90%.
Well, actually, I mean, so what you're seeing in the poll is the exact same thing you're seeing in the price of
yes,
right?
Yes, 100%.
Yeah.
So we've got some smart cookies here. Yeah,
you guys should be market making options.
That's right. You should be. So Vladimir says it's going to be 125K. I assume you mean at the end of December. Maybe. Cora says up only for December. Bull flag bring us to 127K. Interesting. Okay. All right. Well, I guess we're going to see. So hang on. Let me just quickly look at the calendar to find out what we got going on here. So it's the 5th today. We've got the 12th, the 19th, the 26th. So 4 more Thursdays left in December. Now, we're not going to do anything on the 26th because we'll be doing something with the family. So we've got 2 more deribit lives this month before we get started in January. So it's still a lot of time in Bitcoin years. 3-4 weeks is a lot of time for Bitcoin to go at $25,000 after it's just run up.
I think it'll be very, very telling. I had the feeling yesterday. In fact, I wrote a post on Slack in the Bitcoin core Slack yesterday that I think it felt to me like there was a lot of gamma expiring tomorrow, and this is when Bitcoin was down at sort of 96, 97, and it was hovering around. And I remember writing, you know what, there is this sell wall, but there's also all this gamma. So if it does move, there's going to be a lot of hedging, and sure enough, I think that's what we saw, right? A lot of short recovery.
Yeah.
And I think we just maybe it needs a bit more time for more shorts to build up before it crashes through them again. Maybe we'll see.
Yeah, and while you were talking at the beginning of the call, I was showing the liquidation heat map, the Binance liquidation heat map, and there wasn't a ton up above. It's not like shorts are piling in right now. So there wasn't a ton before either. Let's face it. It was pretty light. So it can move around a lot. We have a quick move back down to 94, then back above 100. Easy peasy.
There's a bunch of, I mean, there's a lot of liquidation risk at 101K.
That just seems foolhardy to me, but
yeah,
I guess maybe people think, hey, previous resistances support me, that'll hold, but it's not strong enough for me to lean on that at all. It was only there for a week, so we'll see. But it's holding up right near highs, just underneath all-time highs. So it's just hanging out there. We do have unemployment claims today, and we've got some numbers coming out tomorrow too, all U.S. numbers. So who knows, that could have some amount of impact.
I think the U.S. market's is in a kind of a mood where if it hears bad news, it thinks, oh, great, interest rates will drop and they'll print money.
Yay! And as we've shown in previous episodes, everything just follows them too, right? It just follows liquidity and money supply.
Yeah,
so
exactly.
That's the only trade there is. All right, hey, we've gone way past our allotted 30 minutes, but thanks everyone. Had a lot of great questions, a lot of fun today. Hey, historic time. Maybe this episode will go down in the annals of history. Oh, sorry, the annals of history. Maybe it's the former versus the latter for us. But either way, thanks, everyone, for joining us. We're going to see you next Thursday. Let's see where Bitcoin's at next week.
Okay, cheers.